And we are live. What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made my mission to help you guys own it. We got some cool things to talk about today. We're starting to lighten up a little bit on the earnings side of things. Earnings season we're getting to the tail end of it. This week, we have some big box stores that are going to be reporting. And if you guys recall last quarter, we saw a lot of fireworks, and not in a good way. A lot of things imploding. We have Walmart, Target, Home Depot, Lowe's, BJ's. Some of the other big box stores are going to be reporting this week, and it's going to be interesting. Can they overcome what the shitstorm that they created last time around? And are they over the hump, essentially? We're going to talk about my thoughts, and I would love to get your guys' as well. We don't have too many to react to today, but if I'm missing something that perhaps maybe somebody wants me to react to, I certainly can. The only one that I thought that was worth reacting to today, this afternoon, after the close, was Tencent. Tomorrow, I'm going to give you my thoughts on Walmart and Home Depot, what to expect before the open. I figured that would be a good time to kind of chat about that a little bit. We're going to get into all of that, plus a couple other things that I thought was worth talking about. But before we get into anything else, I've rambled enough. Let's hit up the starting five. I got John Gosson in the house. Welcome to the stream. Jeff Ponica, Savvy Money Show, Kevin Hawthorne, and ZRider 365. You guys are our starting five. If you guys didn't make the starting five, could be because you're not subscribed to the channel. So once you hit that subscribe button, hit that thumbs up on your way in the door as well. And as always, don't forget that notification bell at 3:45 p.m. Eastern time, Monday through Thursday, is when I'm here. I'm reacting to all of the earnings that come about after the close. And speaking of the close, we're getting ready to come up on it. It is a pretty damn good day. We had 4 straight weeks of green in the S&P 500, and it looks as if we're on our 5th, at least to start. We'll see how the week goes. Obviously, it's only Monday, but the S&P 500 is up 0.4%. 18 points to be exact, 161 points for the Dow, which is good for 0.5%. The Nasdaq's having an incredible day. It's up 0.7%, and that's good for 90 points. The Russell actually just turned green for the first time today as we head into the close as well. Oil has come back down below $90 a barrel, and so green across the board. Green arrows across the board. Looking at a couple other things, I see Bitcoin that's actually down about 200 points. Not really a big deal there, though, either. Only down about 0.8. So it seems to be kind of chilling at 24,000. But overall, a pretty decent day, especially considering that the day started out red. The Dow was down, I think, around 180 points or so to open up the day. So, pretty slow start to the day, and everything's just kind of ramping up as we get closer to the close, which kind of brought this to my attention. Hey, what's up? What's up, Raylan? Good to see you. Good to see you. And this actually is a good segue here. I saw Franco says, I saw that poll. Please think twice before listening to Chase, Morgan Stanley, Goldman Sachs, and the like. They don't have your best interest in mind. It's interesting that you say that. I'm not going to sit here and say that I disagree with you. I think that any analyst out there, and I don't care who it is, it's not just the big banks, right? They all have their own interests in mind. Of course, one of those is to be right, but also to create influence. If you think about this, JP Morgan, Raymond James, I don't know why Raymond James just came into my mind, but they also have analysts there. Raymond James, Goldman Sachs, all those guys, they give their thoughts, upgrades, downgrades on each stock. It influences the stock, right? So why wouldn't you take advantage of that? Some people are going to tell you that they can't legally do that, blah, blah, blah. Yeah. And tell me something else that, cause that's just not true. Somebody's benefiting from that. Now, what I found interesting, if you guys didn't catch this, look in the poll here. I put that Jamie Dimon warned wealthy clients of something worse than a recession. And 50% of you so far have voted. I'm sorry, 16 of you have voted. 50% said yes to agreeing to that. 50% said no. I'm sure we're going to see more votes as they come in. But what I find interesting is that Jamie Dimon, actually, I just refreshed that. So it looks as if most of you are not agreeing now. We're getting closer. We're getting some more votes in. So we got about 39 votes in. So 56% of you said you don't agree with Jamie Dimon, while 45% of you do. So let me just give you some more context to this. So Tuesday last week, Jamie Dimon reportedly told their wealthy clients and warned that there was a 20 to 30% chance of something worse than a harder recession. He gave a 10% chance of a soft landing from the Fed, and then downgraded, if you guys recall this. I mean, this was like a news a month ago. Jamie Dimon warned of a hurricane, an economic hurricane, recession type of thing, and it has downgraded that or upgraded it, I don't know, to storm clouds. 20 to 30% chance of a harder recession, 23% of a something worse. And it's interesting because you also have Jamie Dimon. This is a article that came out, Providence Business News, just reporting on Jamie Dimon on the 12th. So on Friday. So let me just provide context. Last Tuesday, Jamie Dimon says there is a 20 to 30% chance of something worse than a recession. Everybody better prepare. And then Friday, there's an article that comes out that while that Jamie Dimon thinks that there's a recession is very possible next year, the company added $420 million to its loan loss prevention in the second quarter for that very reason, but then goes ahead and spends a shit ton of money on expansion. So they forge ahead with its branch expansion plans, which include adding another 9 branches, 9, just to Rhode Island. Remember, I said this is Providence. So just to Rhode Island, this brings the total to 20 by 2025. So if you were really that worried about a recession, about a hurricane, if you will, what are you doing spending all that money to bring in 20 new branches in just Rhode Island? That makes you wonder how many more branches there are in other areas that they're expanding into. And not only that, but Jamie Dimon, JP Morgan, they're loading up on crypto as well. Acquisitions are crazy in that space. So it's interesting. They're talking out of both sides of their mouth, in my opinion. And, we are certainly at risk for a recession still. I have made it clear that I think 2023, we are at risk for that. I said that 2022, maybe not so much. Some may argue that we already are. I just don't see it when you're adding 528,000 jobs in just a single month, as we heard from the month of July. So I really struggle to claim that we are in a recession right now when all that's happening, plus all the demand that we're seeing that's still in the economy. So I think 2023 is certainly likely. Do I think that it's going to be a quote unquote hurricane? No, I don't think so. I think that we see a much softer recession, if we even see one at all. What if we don't? And that's a question that nobody's really asking. What if we don't see a recession? What if there's just an economic slowdown? The Fed does its thing, and there actually is a soft landing. I mean, you have Jamie Dimon saying there's a 10% chance, but what if there is? Are you just going to be out of the market completely because of that? I don't know. I don't think so. I don't think that's the play. I don't think that's the move. Do you want to be a little bit more conservative? Do you want to hang on to some cash for the just in case? Just in case. First of all, I always tell people to do that anyway. And of course, this isn't financial advice because I'm not a financial professional and I'm just out here talking about whatever it is that I want to talk about. But in my opinion, I don't think that there's any reason why you shouldn't have at least some sort of cash on the sidelines. Do I think that there's a lot of cheap stocks out there? Yes. Hell yeah. And one of them, I think, in my opinion, is in the housing group. So housing in general, let's take a look at this. This is a chart of Lennar here. So here's Lennar Homes, fastly approaching that 200-day moving average. Now, there's a lot of stocks that you could be looking at. This one just caught my eye because of the 200-day moving average. You know what else caught my eye? The forward PE on this is at 5 times next year's earnings. This company, Lennar Homes, is not slowing down anytime soon, and they haven't been. And actually, since their last earnings report, they've done nothing but go up. So I think that there's certainly a lot to like here. and there's plenty of instances in which I think this makes sense, or there's a lot of charts that look like this. But Lennar just caught my eye because fundamentally it's cheap. We're looking at the 200-day moving average. Now, granted, today it's slightly down, but not too crazy, and it's kind of beaten down the door of that 200-day moving average represented by this purple line here. So I think that we're at a crossroads with something like Lennar, but certainly worth keeping an eye on. I think that this is one to watch out for. We just heard from Disney last week, and they came in and crushed earnings. You can see the gap up there. We're getting ready to converge on that 200-day moving average as well. They came in and knocked it out of the park, not just from a Disney park standpoint, not just from a attraction standpoint, but also on the content side. They're one of the only streamers that actually grew their subscribers this past quarter by a lot. 4 million subscribers they beat expectations on. You're not getting that from Netflix. So I think that Disney is, even though we saw a significant gap up, there's plenty of room for this to go. Yes, I think $200 is still on the table within the next 12 months. I strongly believe that. So that, to me, also another one to keep an eye on. There was one other one, and it just escapes me, but I think CrowdStrike certainly deserves to be on that list too, ones to watch out for. And this is just broke back up over $200. People will tell me, and the initial reaction is, "Oh my God, yeah, but this is expensive as hell. Why would you buy this stock with a PE in the hundreds?" Because the premium is worth paying for. We are still very much in a time where cybersecurity is at ridiculous levels as far as demand is concerned. CrowdStrike is one of the best in the biz. You could go after something like a Palo Alto or Zscaler, what have you, but the trend is clear here, in my opinion. Since their earnings, they've gone from $138 a share, now getting ready to close up over 202. I think that CrowdStrike is certainly one to continue to keep an eye on. We just saw that break over the 200-day moving average and is actually holding well above that since last week. So I actually like this one moving forward. Now, Melody says, if Jamie said it, I believe it, damn it. Hell yeah. Of course. Who are the states that downfall can cripple the whole market? Well, that's interesting. This is asked from Heinz. I would say obviously California is a clear one. New York, even some of the other coastal states, right? Maryland, believe it or not, we have a pretty big hub for shipping and that sort of thing. If Maryland went down, it would significantly impact the economy. So there's a lot of factors. It wouldn't just be one state, in my opinion, but particularly ones that are on the coast that bring in goods, take imports and, exports and stuff like that. Darren, this is great. Darren Anderson says this is always something scary around the corner, whatever. Yeah, absolutely. There's always risk. And if you don't understand the risk, then don't take it. But there's always risk. Jamie Dimon, I don't know. Like I said, likes to talk out of both sides of his mouth, or likes to talk out of one side of his mouth and then just do something completely different. Salesforce, TSM, also cheap. Is Salesforce cheap? I don't know if Salesforce is actually cheap. Let's take a look at this. So I like Salesforce, to be clear, but they're trading at 40 times next year's earnings, which is actually pretty expensive. From a fundamental standpoint, but I get what you're saying. Salesforce, yes, I think Salesforce is worth paying the premium for too, given the fact that it came down to $154.55, and they actually had phenomenal earnings this past time around. You can see the gap up here was clear, then struggled a little bit because all of tech was struggling, and it's starting to make the move back up. So I agree with you. I like Salesforce. To say it's cheap though, I'm not quite sure I would hop on that bandwagon. It is expensive, but it's certainly come down to a level that I think is attractive. We'll go with that. How about that? Does that suffice? Raylan Records says, don't say New York. I paid off my tuition for this semester of NYU. Oh, nice. That's awesome. That's awesome. Congrats on that. Maryland also has crabs, and don't you forget it. They're the best crabs. You can't get better crabs than at the old MD. Okay, so we do have earnings that we're going to be reacting to this afternoon. I'm going to pull that up right now. That is Tencent. If you guys aren't familiar with Tencent, It is a Chinese stock, entertainment, music, gaming, all that stuff, all the above is what Tencent has themselves involved in. Interesting statistics here. Tencent is scheduled to announce Q2 earnings today. Last time around, they crushed it. We'll get into that in just a second. But the consensus there is 8 cents per share. That's a 20% pullback year over year. And consensus revenue estimate is at 991.93 million, also a 20% pullback from year over year. Over the last 2 years, Tencent has beaten estimates of 75% of the time and has beaten revenue estimates 13% of the time. Last time, I believe they crushed it. Over the last 3 months, earnings estimates have seen 2 upward revisions and 4 downward. That is according to Seeking Alpha. Check out Seeking Alpha. I'll have a link in the description for you guys to get a pretty steep discount, $99 for a year subscription. Normally, that is $240. So just for watching the show, you can get that. Let's check out what they did last quarter. I want to kind of review that real quick for you guys. Last time around, they came in line. So it looks like they came in at 8 cents. The expectation was 8 cents. They missed revenue by 980,000. So that is what they did last time around. And it's been interesting. I've been getting a little bit more mixed reviews. There for a while, nobody wanted anything to do with Chinese stocks. And this has been one that I think could be worth paying attention to. I'm not saying that you should just go out there and buy it, but I don't know. We'll see what happens. Market's officially closed. We'll see if we get any kind of reaction from them. As soon as those earnings come out, I'll be happy to share those results with you. Will Tencent delist, though? And that is a good question that Tiger's Dad's asking here. I mean, if Alibaba's on the list for at risk for being delisted, I think this Tencent's certainly in that category, certainly at risk for something like that. We'll see. I think there's a lot of posturing as far as that's concerned, but I'm not really all that sure about them being an absolute certainty that they're going to be delisted. I don't think so. I'd be surprised. Presto says, is ZipRecruiter today? I thought it was tomorrow. You guys want me to react to some of these? I can. I just don't know how much reaction we're actually going to get. But we can take a look at this. ZipRecruiter, if you guys are curious, estimated earnings per share, 21 cents, $234 million in revenue. Yes, this is such a tiny stock. I don't think we're going to see much of a reaction. But if we do, I'll certainly share the results. Last time around, they beat by 8 cents. 23 cents was the consensus. And they also came in, beat revenue by $6 million. That's actually not too bad, given how tiny this company is. So pretty good stuff. And ZipRecruiter is actually in line with the overall market, 16% down for the year. I think it's slightly underperforming, but not too much. Forward PEs at 25 times. That's a little bit expensive, I would say, as far as that's concerned. So we'll keep an eye on that if you guys want. I'm good with it. Bodie Beard says, hit the like button. Yes. Please do that. I would appreciate it. Mutt Bob says, I made some good money on China stocks. Shorting them or going long on them? Because none of them have been good to go long on for like 2 years now, which has been pretty crazy. Stop Console Wars says, I can't wait to hear about Walmart earnings. So yeah, we're going to get into Walmart. Walmart's actually not reporting today. The only reason that I put them on the show today is because they are reporting tomorrow before the market opens. So I kind of wanted to give you my thoughts and where I could see Walmart going. So I hate to burst your bubble if you were expecting Walmart to report earnings today and Home Depot, but both of them are actually not reporting until tomorrow before the market opens. So I just figured while I have you guys today, I can at least give you my thoughts on what I think Walmart could do before the open tomorrow. It looks as if we are seeing some action on ZipRecruiter. That's interesting. I got to be honest with you. I was not prepared to talk to you guys about Zip, but we can certainly continue to take a look. If those earnings come out, I'll be happy to share with you on that. But it looks like that stock's up now 5% after hours and continuing to move. It closed the day at $20.98. Is this one that's like popular on Reddit or something? Because that's usually when you start to see movement like that, that's usually why. It's rare to see any kind of volume, and it looks like there's not a whole lot of volume here either. But let's see. I don't see any earnings numbers just yet on Zip. We can come back to TME and see what we got. Tencent is moving up a little bit. Let's take a look, see if Tencent, maybe this is just some after hours movement here. Oh no, Tencent looks like their numbers are out perhaps. Let's see. Unaudited financial results. Company came in, net profit of the company was 133 million. 159 was no, that's not right. Can't be 159. Here we go. Total revenue was 1.03 billion, and it looks like that's a beat on expectations as far as revenue is concerned. Yeah, 988.13 million was the expectation. So they came in and beat earnings or beat revenue, which usually doesn't happen. What did I say? 13% is how often they beat on revenue expectations. Let's see here. As soon as I get earnings per share, I'll be happy to share that with you. But it looks like they beat on revenue. Okay, let me see if I can find earnings per share. Got a couple other things that I can share with you. So this is a 13.8% year over year decrease on revenue, which is bad, right? The expectation was a 20% decrease in revenue. So it came in better than expected. So not great, right? But not bad. Monthly active users is 593 million. That's actually down year over year, 4.8% from the 623 million for mobile monthly active users. Paying users, 82.87 versus the 66.2. So that's a significant increase, 25% increase in paying users for online music users. That's significant. So you see the stock moving down, and I think that's probably off of monthly active users, but those paying users, that's a significant jump. Paying users for social entertainment is 7.9 million. That is also up around 28% year over year. Monthly ARPU is up 5.6% for online music, and social entertainment is up 10% for ARPU. So that is not bad, but the monthly active users is certainly what investors are usually concerned with. That's something that we're going to have to continue to keep an eye on as these earnings come out. It's still early, guys. As I'd mentioned, they literally just got out here. So that's going to be one to keep an eye on. The quarter itself doesn't seem to be all that bad. It's just that monthly active users that could bring the stock down. So that's going to be very interesting to watch. Okay. Let's see here. Just seeing your guys' reaction. We'll talk about Walmart here in just a minute. Sales miss says an earnings per share beat. I feel like I got that backwards if that's the case, because it looks like they came in over $1 billion in revenue. Yeah, 1.03 billion. At least according to Seeking Alpha, that is a revenue beat. 998 million was expected. So we will see how the stock continues to react. And like I said, it's early. Sometimes you get numbers out that aren't actually accurate, and I always have to go back and correct them. Most of the time, I try to be as accurate as possible, but sometimes it's just can't be helped. So we'll continue to keep an eye on that. But that's Tencent right now. The stock's not moving a whole lot. We'll come back to this one. Let's check out ZipRecruiter real quick. I know a couple of people were asking about Zip. See the reaction there. We saw initially a 5% jump here, and the stock has now come back down to earth a little bit. Could be just really nothing going on. Not a whole lot of movement on that right now. Looks like the numbers are out. So they came in, quarterly revenue increased to 239 million. That's up 31% year over year. And let me just, the expectation for that was 234 million. So let me just, ZipRecruiter came out 239. So that's a beat on revenue. Not bad. 31% year over year increase. Company adjusted revenue to 883 to 897, or 20% year over year growth. That's guidance for the year. That's not bad. I don't know what the guidance expectations were there for ZipRecruiter, but that's not a bad it's not bad guidance. It looks like they came in plus or minus 3% on their guidance. Revenue beat close to 20% EBITDA beat versus original guide. Guide's revenues are down 3%. So there you go. Guide's revenues are down 3%. So just slightly. You can see that's probably why it gave back some of its gains. But overall, pretty decent quarter. They raised adjusted EBITDA guidance to 163 to 177 million, or 19% margin. Not bad. So there's ZipRecruiter for you. For those of you who are interested in it. If you guys are just tuning in, we did react to Tencent. Tencent did have their earnings officially come out. The stock's now moving back up. Seeing that up around 3%. Let's check back in on them. My preliminary numbers are showing that they actually beat on revenue. Still waiting on earnings per share. It looks like they might have beat on both. Yeah, so earnings of 9 cents. The consensus was 6. And even the whisper was around 8 cents. So they beat pretty handily on earnings per share. And I would just want to confirm on revenue real quick. Revenue was at $1.03 billion. And according to Seeking Alpha, the expectation was 998. So looks like they beat on both top and bottom line. And not a bad quarter for Tencent. You can see the stock's now moving up 3% after already closing up on the day 6%. Let's take a look at the daily chart for Tencent, and it's been looking pretty bullish lately. 475 could be that spot to watch for. Now it's trading at 481 right now after hours. Here's your spot for, let me mark that for you guys so you guys can get a good visual here. So here's your resistance at 475, sitting at 481 right now. And if this opens up above that tomorrow, we could certainly be keeping our eye on for $5 plus. 539 was a recent high that we just saw back in July. RSI isn't anywhere near overbought territory, so this could actually have a lot of momentum behind it if this opens above that 475 resistance tomorrow morning. So keep an eye on that. If you guys are interested in Tencent, that could be one to watch out for. Just a little technical analysis there for you, which, by the way, if you're interested in getting more information, getting more technical analysis, getting more watch lists, and becoming part of the Chaos Crew community, click on the link in the chat, and you can do that for free and join our Discord group. Hang out in there, chat, share ideas, what have you. Christopher says, I show revenue miss. This was on Tencent, I'm guessing. 1.3 versus 1.23 expected. Yeah, I don't, maybe Seeking Alpha is wrong on that expectation. Let me just double check what Yahoo says their expectations were for that. It's always good to cross reference. Yeah, I'm showing 1.23 billion on Yahoo as well. So maybe Seeking Alpha has it wrong. Chris and whomever shared that as well. TME update says the design says revenue is a beat, had wrong numbers initially. Yeah, maybe the expectation numbers are skewed. I run into that a lot, so don't feel bad if you feel like you missed it. I certainly own it if I feel like I missed it, so don't beat yourself up over it, guys. But yeah, looks like I have conflicting expectations on what Tencent's revenue was supposed to be, but it looks like they definitely beat earnings per share. As I mentioned before, 998 was what I had for expectations for Tencent. And that would indicate a beat for the 1.03 billion was the actual. A couple other ones that are reporting right now. As I'd mentioned, ZipRecruiter came out 11 cents. Consensus was 6. So they actually beat on earnings per share, and they beat on revenue as well. Solid quarter for ZipRecruiter. The one of the reasons it's moving down We'll come back to the 5 minutes so you guys can take a look at that, see what's happening to it in real time. We saw this huge move initially, and one of the reasons why it's coming down was because guidance came in a little bit lower than expected by about 3%. So that's why we're seeing that give back all of those gains. It was up around 5% at one point. A couple other ones, POWW, that reported today as well, in case you guys were interested, in Ammo Inc. That's trading down right now. They reported earnings of 9 cents. The consensus was 4. So they actually beat on that as well for as far as earnings per share is concerned. GAN, remember GAN? And that was one that actually did so well during the pandemic as a casino play. And look at this. This is your daily chart. Let me get you a better looking chart. Here you go. Here's your daily chart. This is sitting at $31.81, and back in February 21, and now close the day at $4.34, and is actually down 20% after hours. They came in and reported a loss of 21 cents. The consensus was a loss of 12, so they doubled their losses versus the expectation for GAN. God damn, that's rough. GAN, I believe, was closely tied to building software and that sort of thing for sports betting platforms, and you can see that stock is just absolutely getting killed. Okay, so let's talk about Walmart and Home Depot a little bit. We'll come back and talk about some of this stuff, and then we'll get into shit or legit. Let's do that. So Walmart has earnings tomorrow before the open. So pre-market, they're going to be reporting their earnings and expected earnings per share. Again, this is according to Seeking Alpha. And so, sometimes the number's a little bit different depending on where you get your numbers from. $1.60 is the expectation here. 149.96 billion. And let's just cross-reference it. Let's just do the smart thing, and we'll cross-reference this for you guys just to make sure that they line up. So $150.75 billion is the expectation for revenue, according to Yahoo Finance. So not that different from what Seeking Alpha has at 1.96 billion. So if you guys recall, look at this gap down. This is what happened last earnings. If you guys were around or remember Walmart last quarter, they came in and missed on earnings pretty badly. They actually came in with expectations of around $1.48. They missed by 18 cents, coming in at $1.30. And $140 billion in actual revenue. They beat on revenue. One big reason why they beat on revenue was because of non-discretionary item sales. So what happened here was that Walmart had too much of discretionary items on their shelves in inventory, and that was losing them money. They miscalculated and misjudged the consumer and their shift to non-discretionary items, or from discretionary to non-discretionary items. And that's what really killed them. And it killed Target too. They both misjudged this. This resulted in the worst 2 days that Walmart and Target had both seen since 1987. That was Black Monday, if you guys were around then. I was 1 year old. That's how long ago it was. I was 1 year old in 1987. And so this was terrible. Awful day for Walmart and even Target. And actually, Target reacted to this. Here's your Target chart. Target actually reacted to Walmart's earnings before Target's earnings even came out. And then Target even came in and basically supported what Walmart was doing as far as performance is concerned. But who didn't do this? Who didn't actually have this type of reaction or poor earnings? That was Home Depot. Home Depot actually did well. Home Depot did well. BJ's did well. Lowe's also did okay. And actually, my favorite big box store is Costco. And they absolutely annihilated it. So Costco came in and reacted to the Target and Walmart earnings prematurely. They came out with earnings the week after, which we'll hear from them next week. We'll hear from Costco next week. And I think that they can still come in and crush it. Costco didn't misjudge their customer base. They actually did what they were supposed to do. Can Walmart come in and actually show a better quarter this time around? My opinion on this. Now, listen, we can certainly make speculative guesses, and that's essentially what I'm making. It's an educated guess, right? I would love to say, oh yeah, Walmart's going to beat it, they're going to crush it, or yeah, just go out and buy it, blah blah blah. So this is just me making an educated guess, and if I'm right, I'm right. If I'm wrong, I'll let you know I was wrong. You all can tell me I was wrong tomorrow. I think the bar has been set pretty low here for Walmart, and I think that they have the ability to pivot rather quickly. So for those reasons, and given the fact that we're seeing a pretty decent drop in inflation, and some might argue, well, we only saw inflation drop over the last month, right? We got CPI numbers in July, but we can only go by what we saw over last month. That's not exactly true. CPI numbers are a lagging indicator. CPI in and of itself, PPI, producer price index, and consumer price index, the CPI, those are lagging indicators. Yes, the Fed uses those as a measure to raise rates. That's not the only thing they use, because the Fed knows that's a lagging indicator. Just like jobs reports are lagging indicators. CPI usually is around 3 to 4 months behind what's going on right now. Just like earnings, right? Walmart's going to be reporting on earnings that happened over the last 3 months. That's why guidance is so important. Traders, investors are buying and selling based off of what's going to happen in the future. So if Walmart comes in and says, hey, this past quarter sucked, but you know what? We're over the hump. We're actually seeing inflation costs come down. Now, something that is a little bit stickier, obviously, is going to be wages. They can't just cut people's wages at this point. You can't go back. The toothpaste is out of the tube. So that's going to continue to be a problem for them. But shipping costs, gas, fuel, energy prices, all that is coming down. So if they come in and say, hey, this past quarter was still kind of lousy. We're trying to get our bearings back together, but we have a pretty good guidance numbers to give you. And I think that could be the story that gets told from Walmart. If they're smart, they should do that. If they're smart. Stock is up a little bit after hours today, was up 1/3%. It's had a pretty decent comeback from their $116 lows after reporting those atrocious earnings. But let me know what you guys think about this, because Walmart is said to be a quote unquote recession-proof stock, right? Because they have pricing power. Inflation or no inflation, they should be able to do well because they can price in whatever they need to pass on to the consumer. Because most of what Walmart sells, the consumer either desperately wants or for sure needs, right? Clothing, food, those types of items. Grocery stores are in that same belt, that same vein. So I think Walmart should, if they got their bearings right, they figured out what was going on, they should do well. Chart's also very interesting looking. Today they closed at $132 a share, $132.60, and you have resistance here up around $134. We'll call it $135 a share. And so I think that's going to be an interesting spot to watch. You also have this gap that's kind of sort of being filled here at right where the close was today at around $132.60. So that's going to be an interesting spot to watch. I think that Walmart has the ability to do this, but of course, earnings ruin all charts. So I think that, in my opinion, Walmart certainly is there, could do pretty well. But let me know what you guys think in the comments. I really want to hear from you about Walmart. Home Depot, a little bit of a different story. They did extremely well on their last quarter, and I think they're poised to do well again this quarter. They've been beaten down so much over the last year that I think that last quarter they showed us a little bit of something, that they can weather this inflation storm and they can do well. They beat last time around by 40 cents. They came in at $4.09. That was a beat from the what did I say, 469 or 369 that was expected. So they crushed earnings per share. They beat by $1.52 billion on revenue as well, coming in at 38.91. The expectation for tomorrow is $4.93. $43.33 billion is the expectation of revenue. So not really that much of a jump from that last quarter, but I think it's a jump that they could certainly beat. The chart here looks very interesting as well. $316 thereabouts is the next resistance. This has come a long way from the $264 lows that we saw. You know, what's interesting about this is that Home Depot got crushed. One of the big reasons we saw a move down here is because of home sales. We saw home sales come down, and so that usually translates into demand coming down for home improvement projects and that sort of thing. If you're not seeing an increase in home sales, then why would you see any kind of increase in do-it-yourself type project stores like a Home Depot, right? But I don't think that that's actually the case. I think that, and you started to see those buyers come right back in. So there's a lot of people that agree with me here on this. They've actually done really well, all things considered, over the last year. Over the last 52 weeks, they're only down around 6%, which is better than what you could say for most stocks. Year to date, however, has been the real story. Year to date, they're down 23%, and that's after this move up. So obviously a long ways to go. Lots of bullish indicators here, I think. This is your weekly chart. $415 was the highs that we saw back in just December of 21. So really not that long ago. They could have a really serious move here. Forward PEs at 19 times next year's earnings. Guys, I think that there's a lot to like here about Home Depot, given the correction that we've seen from them. So I really like the stock, and also let me know what you guys think about this one as well. We check in on some of the comments. 1987 says Jeff Honecker was a tough year for commodities brokers. Yeah, it was a tough year, I think, for just about everybody in the market at that point in time. Bob says, makes me feel old. I've been out of school longer than you've been alive. I'm not even that. It should make you feel old because I'm not even that young anymore. Good to see you in here, Bob. MEGL just broke 19. Let's just look at MEGL. Looks like they had earnings too, which I wasn't really. Magic Empire Global. I got to be honest with you. I don't know much about this stock, but it's up 7% after hours. It closed up today 115%. I don't know what's going on here. Let's check this out. News. Why is Turquoise Hill? Oh, no, it's Turquoise Hill. Why is that down? I don't know why this one's moving, but yeah, it closed up 115%. It's now up 7%. Maybe you guys can shed some light on this one, but I have no idea why MEGL. Stop Console War says, I love Walmart for choosing Paramount to do streaming deal over the rest of the rival Prime deal. That's also interesting too. And I didn't actually touch on that. So that is a really interesting point that you make as far as the Walmart news and Paramount. Let me just pull that up so I get it all correct here for Paramount Global and the Walmart deal. So Walmart Plus, to include Paramount Plus and streaming team up. Walmart has come to a deal with Paramount to offer the Paramount Plus streaming service as an added perk for its Walmart Plus subscription customers. So this is kind of like Prime, right? You get certain perks for going to Whole Foods as a Prime member, right? That's kind of how this is tied in to, and how Walmart's still trying to compete with Amazon. So now they're partnering with Paramount Plus. They're going to bring the offerings here include a series based on Halo, Star Trek, an incentive to sign up for a Walmart subscription product, a 2020 response to the success of rival programs, chiefly Amazon Prime. This is from Seeking Alpha, of course. A Walmart Plus costs $12.95 a month or $98 a year. And like Amazon Prime, it looks to offer free shipping on products as well as other perks to customers, including 6 months of Spotify streaming. So I don't hate this move either. And I'm not quite sure what stock would have been a better move. Let's see what Paramount did today. Was there any kind of movement on that one? I actually didn't take a look. Yeah, not really. So we saw a nice little spike here off of that news, it looks like. Closed up 1.5%. But I don't hate that move for Paramount either. I don't hate that at all. Thanks, NASCAR. Appreciate the clarification on that. Yeah, I don't hate it either. Stop Console Wars. I don't hate that either. Darren says I graduated high school in 1979. Guys, if you're liking the stream so far, I certainly would appreciate it if you could hit that thumbs up. There's about 200 of you in here. It's not bad for a Monday afternoon. Hit that thumbs up if you're enjoying it so far. And let's go ahead and get into some shit or legit. Let me know what stocks you guys are looking at, and put SOL and your favorite ticker in the chat, and I'll react to it as to whether I think that stock is shit or legit. So just kind of doing a recap as we get some of those requests in. 10 cents moving up on an earnings beat. There's some still controversy around the revenue beat here, but they beat on earnings per share. There's no mistaking that. And the stock is actually moving up pretty nicely here after already closing up the day 6%. They're now up another 4% nearly in after hours trading as a result of their earnings. ZipRecruiter also came in, and surprisingly, I wouldn't say surprisingly because I wasn't quite sure what the expectation was. They came in and actually beat on earnings per share and beat on revenue as well, pretty solidly. The stock's down 4.5% right now, primarily probably because, and I'm just speculating here, because the guidance was down 3% than originally anticipated as well. So that could be why, as we always know, guidance trumps all. And that could be why the stock is down. I'm going to go out on a limb and say that is why the stock is down here after hours. So pretty tough day for ZipRecruiter, for some of you guys who might have been watching that one as well. Shit or legit on MEGL. I'm just going to go out on a limb and say that MEGL is in fact shit. Let's just take a look at the chart here, right? I mean, what the hell? What the actual fuck is going on here? This has been trading for 1, 2, 3, 4, 5, 6, 7 trading days. Just started trading back on August 5th. We saw this go all the way up to $249. This is like what was that other stock that moved like this just recently? HKD or HDK, whatever the fuck that was. HDK. Whenever I see shit like that, I'm like, I'm not even paying it. I'm not even giving it the time of day. Oh yeah, it's went up to $2,500. This would have been an epic short. This is your daily chart on HKD. 25.55.30. This is suffering the same fate. MEGL, same type of move. Same type of move. And then so 25.55 and came all the way down to 192. Imagine being this poor sap that bought it all the way up here. Yikes. No thanks. That's shit. Not like you guys didn't already know that that's what it was going to be. I appreciate you bringing it back, though, NASCAR. I appreciate it. NRG. Is it shit or legit? Here we go. One that we can actually have a clear conversation on. Energy is the company here. Nice little play on words. Let's come back out and bring this daily chart back out to where it looks like it makes sense. Here we go. So energy is very interesting. Just the energy sector in general. Some people are starting to already write off the energy companies as a whole, and I think that that's actually a big mistake. So year to date, energy is only down around 1.65%. And I think that this could be one to certainly continue to hold on to. One of the reasons is because I think energy, while it's been really tough, I think that they have the ability to make a really strong comeback, and they already are. I think valuation wise, they're nice and cheap. You can see that's already had a pretty strong move. What I would say is probably not buying in up here. So for the moment, it's legit, even though there's a lot of risk in buying it all the way up here. I mean, it closed the day at 1.39%. Just in July 20th. So not even a month ago, 3 weeks. It's gone from that $34 range all the way up to 42. So about 25%-ish move from its lows just 3 weeks ago. To me, I think this is a bit risky. This could go up just as quickly as it came down, right? But I just don't know if I would go crazy on it. So it's legit. I actually like the company. I don't think there's anything wrong with it. But I think it would be awfully risky to just buy in up here. WWF. Is it WWF or is it WWE? I don't know what. That doesn't look like it's right. WWE is always a buy. It's always legit. I don't know what to do with this chart. Let's go on to the next one. Sorry about that, Papa Shoe. SENS. SENS. So this one is interesting. Stock closed at $2.20. It's trading at 216 here in after hours. And it looks to me like it's potentially a pump and dump. But I don't want to judge a book by its cover. So let's take a look at this a little bit. The stock is only down 20% on the year, which ain't bad considering there's a lot of other stocks that are down a lot more than that. Market cap's around $1 billion. Let's see what else we got here for them. Medical technology company that develop and commercialize continuous glucose monitoring systems. The technology is great. I like the industry. Company's products include SENS XL, which are implantable CGM systems. I'm going to say that this could be legit, believe it or not. I know just because it's a $2 stock doesn't mean I can't say it's shit, or legit. I think it actually has some decent legs behind this. Now it's moved up a lot. I'm trying to figure out as to why this has moved up so much recently. I don't know. I have to do some more digging on this, but the company itself, I actually like it. I'm not gonna hate on this. I think it's legit. There you have it, Sean. Shit are legit on Disney. We already just talked about Disney at the top of the show. It's legit. I really like Disney right now. They're one of the few streaming companies out there that have beat expectations by 4 million subscribers. And combined, okay, not just Disney Plus. Here's the crazy part. I called this when Disney Plus became a thing. I said Disney is going to surpass Netflix at some point. Now, Disney Plus has not done that by itself, but the Disney-owned subsidiaries in the streaming world have. That's ESPN Plus, Hulu, Disney Plus, of course. Combine all of Disney's streaming platforms, and they have now surpassed Netflix. I am mind blown that it happened this quickly. Disney Plus has only been around since what, 2019? That's crazy. And it hasn't even been 3 years yet. It'll be 3 years in November. So combined, they are now bigger than Netflix as far as streaming is concerned. Netflix as a sole platform is still king for now. But man, and listen, I know that Disney's got a lot of other things, and I've been a huge proponent, or whatever you want to call that. I've pointed that out quite a bit, that I actually put more weight into their parks and the entertainment side on that side of things than the content itself. But make no mistake, the streaming side of things, Disney has also got that on lockdown. And man, I just think that Disney is a great company, and it's been going through it over the last year, but it's still cheap in my opinion. It's legit. MULN. Let's take a look at this one. MULN Automotive. All right, let's pull this up. This one I'm not so sure about, Michael. Stock's trading at 90 cents. As I said, about the last one, about SENS, I'm not going to just rule it out because it's a cheap stock, but most cases they're down here for a reason, right? I think we all know that. But I'll give it the benefit of the doubt. MULN is an electric vehicle company, manufactures and distributes electric vehicles. All right, I'm not even reading anymore. Listen, it's shit. Okay, it's shit. This is not something that I would be even looking at. I know it's got, maybe it's got some potential because it was trading at $4 back in March of this year, but no, it's shit. Nope. Sorry, I'm out on MULN. I know you'll like this one, T Rowe Price. How can I hate on T Rowe? was my last job before I retired. Just kidding. I'm not really retired. But it's my last real job was T. Rowe Price before I went on the YouTube and got to hang out with you guys every day. I love T. Rowe. I think, the financials obviously have gotten beaten down a ton, but T. Rowe has been one that's done extremely well. It's been going through it. PE is at 15 times next year's earnings. That's actually not too low, considering if you compare it to some of the other financials, such as Goldman Sachs, which is about half that. So T. Rowe, I think, does an extremely good job at what they do. It's legit. I think T. Rowe is legit. All right, let's take a look at what else you guys got. Hey, thanks, appreciate it, Ivan. Hi from Samoa. Man, I love hearing where people are from. I absolutely love it. It's my favorite part. My favorite part about what I do is just being able to connect with people from all over the globe. And that's going to do it for me, guys. I really appreciate you hanging out with me this afternoon. And it's been a ton of fun. Going to do it again tomorrow. We got a lot to react to tomorrow as well. As I'd mentioned, Walmart's going to be reporting earnings tomorrow. Pre-market, Home Depot is, so we can react to those as they come about. We have a couple other ones that are going to be reporting tomorrow too, I think. Hold on. Let me just pull this up. I'm going to make sure I'm confirming with this. So we have Walmart, Home Depot, C also reporting pre-market. Maybe we'll react to that one a little bit. Not too much after hours, but I'll give you my thoughts tomorrow afternoon on what's to be expected pre-market on Wednesday, which will be Target, Zim, which we've talked about a little bit on this channel, Lowe's, Krispy Kreme, which, by the way, was one of the stocks that I put on our watch list for our Chaos Crew. So make sure you check that out at ownthechaos.com. I think that's going to be sneaky good. TJX, and a couple other ones that we're going to be reacting to, or that I'm going to be giving my previews to tomorrow afternoon. So, guys, you're not going to want to miss that. Make sure you hit that subscribe button, hit that thumbs up on your way out the door. Thanks so much for tuning in, and I'll see you all tomorrow.